Hey, Chris. Hey, Corey.
Got
Hey,
Leonardo.
Leonardo. All right, great. This is awesome. Um, while we're waiting, I'm here in Austin, Texas, in our office downtown. It's a nice day for once. Hopefully, all of you are staying warm across the country. Tony's in Florida. Is that right?
Yep, South Florida, West Palm Beach. So
Tony's in
we're roughing it
Florida.
down here.
He's a little bit warmer than I am.
Yeah, exactly.
Cool. Excited. I'm very excited to do this with you guys today. Just a few more minutes and we'll get started. Probably grab a water.
There you go.
Tony, what's that in your background there?
Looks like it's Venice.
Venice,
Yeah.
Italy?
I'm Italian, so I got to have some Italian stuff in here in this office. So
That's great.
yeah.
Cool. Well, let's go ahead and get started, I guess. I'm sure a few more people will join while we're getting going, but definitely have a lot to cover. So first and foremost, I want to thank everyone so much for joining us. My name is Glancy. I'm the founder and chief revenue officer of ZenBusiness. We are so excited to have you guys, and I just can't thank you guys enough for your support and continued business. Really means a lot to me and the rest of the team here. And this is the first of what I hope to be many value add webinars that we can provide for you guys to, number one, help you, become more successful in your own businesses. Number two, which is probably why you're here, is to help you save money on taxes and from the revenue that you've brought in. So I just want to first and foremost congratulate all of you for, taking the steps to becoming entrepreneurs and using, ZenBusiness to get off the ground. So without further ado, I want to introduce all of you to our partner, an accountant in a box CEO. His name's Tony Tropeano. Tony, how are you today?
Doing great.
So
glad to be here and to go through.
Yeah. This is exciting. I also have to do taxes, so yes. I'm probably just as giddy as everyone else. So for those of you who are just joining, there's a poll. Please go ahead and answer those questions if you can, and then also there's a Q&A. So at the end of the kind of the slide deck we're about to present, or just during the whole time, feel free to ask any questions, and then as soon as we finish up with that, it shouldn't hopefully take more than 10-15 minutes there. We'll do a quick Q&A, and then everyone can get back to the rest of the day. So without further ado, Tony, take it away. I'll be presenting, so Tony's going to let me know when to switch the slides. But other than that, Tony, go.
Sounds great. So we're going to go through a few different things today. We're going to be going through different corporate structures, depending on your situation. That might be helpful for minimizing tax liabilities. We're going to also go through a new deduction called Section 199A, which is for pass-through entities. Pass-through entities are S corps, partnerships, and single-member LLCs. And also go through some tax planning strategies and tax deadlines for this year. So, and JC is going to go to the next page here. We're going to go through the first part of the process here. Okay, so we got the corporate conversions. Most companies that we see go through ZenBusiness. They sign up, they form an LLC, which is definitely a good way to start. But in terms of tax savings and a more tax efficient structure, typically an S corp or C corp is the best way to go, unless you have no profit. So the first structure is a C corp. You can actually be taxed as a C corp, so you can set up an LLC and convert it to a C corp by filing Form 8832, which is not listed on here, but it's a form we have to send off, and we take care of that through ZenBusiness. So it's a flat tax of 21%. You have multiple classes of stock, and either foreign owners and corporations can also own a C corp. An S corp, you don't have that flexibility on. So there's no salary requirements, and it's beneficial if you're generating a lot of revenue. So anything above 150 for singles and 300,000 for married filing joint. So everything's always double for married filing joint. The disadvantages are the fact that if you are in a higher tax bracket, if you're above 40,000 for single, 80,000 for married filing joint, you're gonna have a 15% dividend tax. for owners. So if you are paying yourself out, you're doing withdrawals.
Hey, Tony.
Yes.
Hey, so I just want to make sure everyone caught that. Can you I'm a little confused myself even. Can you go over what you mean by MFJ? Was that married?
So that's married filing joint. So that's if you're married, married filing joint, and then you have single. So if you're single, single status, single filing status, or married filing joint status. So there's 4 different statuses when you're filing. So you have one is single, another one is married filing joint. So if you're married, or married filing separate if you have separate tax returns, and then there's also a head of household, which is another one.
Thank you.
And we'll send that off as well to different people that might have questions on that. They might not know where they're at. Maybe they might be separated or divorced, or it's hard to say. So, but there's different tax structures that are more favorable. So on that side, the 15% dividend tax, it could be up to 20%. It depends on the income tax that you're at, the taxable income that you're at. So you could effectively be paying anywhere from 31 to 41%. Now we'll break it down simply. If say for instance, your net profit after expenses, so your revenue, say your revenue is $150,000 and your expenses are $50,000, your net profit would be $100,000. You'd be taxed at 21%. That's the flat tax. So what is that? $21,000. And it's very easy across the board on that side. Different states have different tax rates. So that's something that we would be able to address separately from this discussion. This is only related to federal tax matters. The next corporate side is the S Corp tax structure. It's not an actual official structure for a state. It's only a tax structure. It's Form 2553, which is a small business election to be treated as an S corporation. There's no self-employment tax. And self-employment tax is 15.3%. There's a little calculation on that. It works out to be around 15%. So say, for instance, you're an LLC that you start out. A lot of people come to us and they'll be set up as an LLC, and they don't realize that they're going to have that additional tax of 15.3%. So say, for instance, they potentially have $50,000 in profit after revenue and expenses. They're going to end up with roughly $7,000 in additional tax, which can come to be quite a surprise for a small business owner, especially if you don't have a lot of reserves saved up, and it can be a shock if you don't know how to structure it properly in the beginning. So the rule behind S elections is typically you have to file within the first 75 days after the formation. And if you file within the first 75 days of the formation, then you can be treated as an S Corp. If it's beyond the first 75 days after the formation, then we would have to send off a late election letter, which opens up a whole other can of worms, but we do that all the time, and that's something we can also talk about later as well. The disadvantages are that shareholders cannot be foreigners or companies. So shareholders are the owners of the S Corp. A reasonable salary would be required. So a reasonable salary is based on labor standards. So the goal behind the reasonable salary is that you're still saving on self-employment tax. So if you have profit of $100,000, you wouldn't be paying a salary of $100,000, but potentially anywhere from $30,000 to $40,000 potentially. So you're still saving thousands of dollars. Minutes of meetings is something that has to be tracked. So if you have multiple people on there, then you have to just create a document. It could be as simple as a Word document that you talked about different matters in the business, maybe related to an office, setting up an office, or signing a lease, or bringing on employees. And if you're the only owner, I'd encourage you not to have discussion with yourself and answer yourself, but you can actually you can write down on a Word doc and just what you've gone through over the course of the year. It could be just a once a year thing. It's just, and a lot of people don't do it, but it's just something we have to say as for protection. So there's only one class of stock for an S Corp. You can't have multiple classes of stock. So it's not recommended for people that have investors in multiple classes of stock. And it's not advantageous if you have a higher income tax bracket. So going back to the C Corp tax structure, if you're making over 150,000 in profit, you want to stick to the C Corp structure, because at that point, then you're going up above 22%, 22 to 24% taxes on that side. So, and then the LLC is the last tax structure. So when you're originally setting up an LLC, you're going to be either taxed proprietor, which is that 15.3%, a partnership, an S Corp, or a C Corp. So the partnership and the sole proprietor side is the same thing. It's still self-employment tax at 15.3%. That's at a disadvantage. It's not advantageous for higher income earners. And all of these, the S Corp and the LLC pass-through are eligible for the Section 199A deduction. There's no salary requirement, and it's a little bit, typically it's more flexible than an S Corp, so you don't have as many restrictions. The IRS does require a salary once the business starts generating profit on the S Corp side. So the LLC, there's no such requirement as that. So we'll go on to the next section here on Section 199A. And Section 199A is a tricky one, because it actually has not been approved or through the IRS yet in terms of the forms yet, the worksheets. So we actually cannot finalize tax returns for pass-through entities until that's finalized. It should be finalized within the next week here. The whole government shutdown actually kind of put a delay on that, but it's an interesting deduction that was passed through. It's actually very, very effective for small business owners. It will reduce your tax liability. It's for any qualified trade or service, with the exception of anything that's in the health, law, accounting, engineering, performing arts, consulting, athletics, financial services, and investment management. And also employees cannot claim the deduction. It's a pass-through entity qualifier. So what that means is you have to be an S Corp, a partnership, or a single member LLC. Either one of those would count. And the way the deduction works is based on net profit. So the calculation is a simple calculation, typically starts as the bottom line, the net income, which is after expenses. So in this case, I put an example or $200,000. Your qualified business income deduction would be $40,000. Now, it can get a little bit more technical as you generate more revenue, if you have more income, and it phases out at a certain point. As it mentions down there, the pass-through entities are an S Corp or an LLC taxed as a sole proprietor or partnership. We'll go on to the next section. And so as I mentioned, there are some limitations with it. So if you're above $207,000 in taxable income, it's eliminated, and $415,000 if you're married filing joint. So those are the two things. And they're still kind of ironing out a lot of these little quirks with this deduction. It still hasn't been solidified. So it's a very favorable deduction. Like I mentioned, it's 20%, so it can really drastically reduce your tax liability, which is nice. And I think a lot of people will be getting refunds because of this, which is good. As I mentioned here, a lot of us accountants do not know if this will remain. We have no idea. There's a lot of complexities behind it, but we hope it'll stay and it will be a benefit for that side. Go on to the next one. And so these are some of the tax deadlines that we have. If you're just starting out your business for the first time, you might not know a lot of these deadlines that are on here. Obviously, we just passed the 1099 deadline for submitting it to the subcontractor. So that means you have to mail it off or email it to the subcontractor if they make over $600 in contract wages. February 28th is coming up soon here. So that's to actually submit it to the IRS. So that's actually filing it to the IRS, and you can actually e-file it. There's some different websites out there, one called Track 1099. That's a good solution for e-filing your 1099s. We use that ourselves. And then the next one is in March. So we have S Corp deadline, and then we also have the partnership tax deadline. So those are due in March 15th. April 15th, we have the deadline for the personal tax return, and then also the quarterly estimated tax. So if you're actually profiting, whether or not you're a C Corp or a partnership or any pass-through entities, you'd want to do some estimated taxes or start yourself off on payroll if you're a pass-through entity as well and start withholding. So that's the deadline to file or to file an extension also as well. And it's also the last day to contribute to an IRA that would be allowed to be deducted on your 2018 tax return. So that's actually a really nice thing you can do. You can wait until your tax return. You can contribute on it, so long as that you applied and the application was approved for the IRA as of the end of December 31st of 2018. So you could actually say, for instance, you paid yourself a salary. If there's anybody in here that had paid any salaries, so say, for instance, you paid a couple $100,000 in salaries, you could actually max it out. There's a solo 401k and a simplified employee pension plan that allows you to max out your retirement plan. And that's actually going to be discussed in the next slide. Yeah, so these are some tax planning considerations when you're starting out. An HSA is a good option, a health savings account, and you just set that up under your personal or your business, and there's actually a pretty solid deduction on it. I believe it's around $7,000 if you're joint, and around $3,500 for an individual. And what's nice about it is not only is it a good solution for your health side, but it also is a good solution for a retirement account. You can actually build that up, and you get a deduction for it. So there's a taxable benefit, and you can actually generate interest and earnings through that, and grow it and take it out when you're 59 and a half years old, and it's a retirement account essentially. A lot of people don't know that. Traditional IRA is something that you can contribute to as well. What we mentioned before, solo 401k or a SEP, that's typically used in S corporations. And if you max out your salary, you can max it out to around $55,000 on that. I would encourage using Gusto. That's what we use for payroll, and that you can start the withholding process. So that's kind of help you with estimated taxes to help you prevent penalties and interest. And also, if you have health insurance, or if you're considering getting health insurance, running that health insurance through your payroll, and it'll be included in your salary, but it's actually a dollar for dollar deduction on your personal tax return, which is a nice little bonus for you if you have health insurance, which ordinarily you wouldn't be able to deduct if you were an employee. But since you're an owner, you can actually run that through, because it's a self-employed health insurance deduction, and it's a dollar for dollar deduction on your personal tax return. So with that being said, we have a little bit of a Q&A time here. I believe, is that the next one? Yep, it's a little Q&A time here. So you guys can feel free to ask any questions that you have related to taxes or accounting or anything that you have.
Yeah, thanks so much, Tony, and great job. That was really insightful. I learned a lot as well. Looks like Heidi had a question. Are you able to see that, Tony?
Yes. Okay. So let's look at this here. So she says the LLC is at least $800 in taxes in California to the franchise tax board. Is there a way to lower that if I haven't opened yet and only have had startup fees? Do you have the templates? Okay. So on that side for the franchise tax board, it's really the first year that the company has actually been in business. So there is an exception for the first year, but after that, then you have to do the $800, or I believe it's 1.5% of your taxable, or of your income that you get taxed on. So the first year, yeah, you can actually, I believe there's a way that you can waive that in the first year if you didn't have any activity. Do you have the templates for meeting minutes and Word by chance? I can provide that. Yeah, I can do that. Are there any LLC deadlines for taxes? Well, LLC is not an actual tax structure. So an LLC would be either taxed as a sole proprietor or a partnership or an S corp. So it depends on what your tax structure is. So if you're taxed as a C corp, you would be due in April. If you're taxed as a S corp or partnership, then you're going to be in March. And if it's a sole proprietor, tax as a sole proprietor would be in April, along with the personal tax deadline.
Great.
Hopefully that answers your question.
Yeah, and then for any of you who want to ask for any further questions after this, you can definitely book a free consultation with Tony. There's a link to his calendar in the in the slide deck. You can also conversely take a picture of the QR code there, and that should take you right to the site. I see Caesar asked a question. He said, can you later change to an S Corp if you're currently an LLC taxed as a sole proprietor?
Yes, you can. Yeah. There's actually a late election letter that we put together. We have enrolled agents that put that together. And we just kind of put a little bit of weight on that with some reasonable causes for the reason why it was delayed. So, and that way it'll save you some money on taxes. So we can offer that up. we do offer that. It's so the S Corp conversion on our side is $200 traditionally. And if there's a late election applied to it, it's $300. So there's 3 forms that we have to fill out for that on the LLC side.
Great. Okay. Yeah, we have a couple more questions rolling in. I see one from Tanisha. It says, I started my LLC in October of 2018 and I haven't opened for business yet. I only have startup costs so far. Do I file for the 2 months in 2018? Yeah,
so that's goes along with some of the other questions I saw earlier. Excuse me. Yeah, it would just be filed through the Schedule C on the personal 1040. You could run those startup costs through the 1040, and it would reduce your tax liability. And that's it on that side. And then it's like Heidi has a question too, I guess.
Yeah, go for it.
So can you provide more details on the health insurance max out as self-employment? Thank you. Health insurance max. She referring to HSA? Let me see if she what she's referring to.
If you could provide some clarification.
Yeah. Yeah, because so on that side, if you're doing an HSA, you can do $6,900 for a family plan, up to $6,900. But yeah, if she wants to get back on that, that's fine. There is actually no max on that. It just goes through your salary. Sumeda Kana. So I set up my LLC business in July 2018, but only this year, 2019, beginning the services. Do I still need to pay 15.3% self-employment tax? What is that in California? So if you didn't generate any income, there's no self-employment tax. So you don't have to worry about that. And the same thing in California. If it wasn't an actual first year and with operating business, then it should be fine in California too. Just depends on their situation and if they have any income.
Great. We have a question from Jurgen. Do you see that, Tony?
Yeah, okay. So does an S Corp or C Corp benefit from the 20% off the top business tax deduction? Okay, so an S Corp is a pass-through entity, so that's the only one that actually qualifies. A C Corp actually does not qualify for the pass-through deduction. It's actually a pass-through deduction, the Section 199A. So only an S Corp, partnership, single member LLC will qualify on that.
Okay. Patrick had a question. He asked, does franchise tax apply to the state you work in if you're registered in another state? I'm in California and opened the LLC in Delaware.
So it doesn't matter if you're registered in Delaware, you still have to pay the franchise tax in California. And I typically don't recommend setting up a Delaware entity unless investors require it. You have multiple classes of stock, and there's a lot of restrictions on that side because there's a lot of expenses out of Delaware. So you have to pay franchise taxes there, and your report filing fees and all that stuff. It can get very expensive, and then you have registered agent services there too. So only if it's really required. So that's kind of a misconception. A lot of people say, "Oh yeah, I hear Delaware is a great state to form in," and you got to really know what you're doing. So especially for startups.
Definitely. Heidi did follow up with her previous question with some clarification.
Okay, I guess the right. Okay, you mentioned a max. Yeah, so really, it's there is no max on health insurance. That just runs through your W-2 wages, and it's actually exempt from Social Security and Medicare as well, tax. So typically, when you're processing payroll, you're going to have Medicare, Social Security, withholding, federal withholding, and state withholding. But in this case, it's going to be a part of your gross wages, but it's going to be exempt from taxable wages. If that makes sense. So that way you actually get a dollar for dollar deduction. It's a deduction for the business too. So it goes right through there. So it's a very, very nice deduction.
That's great. Well, thank you, Tony. I'm not seeing any other questions coming through right now, but just as kind of a closing note, I just want to thank each and every one of you for joining us today. Some of you asked about whether or not we'll follow up the slide deck. We will. I'll be sure to email it to each and every one of you. And then also keep in mind, other than the taxes that you have coming due, there is annual reports in most of your states. We can take care of those for you as well, and we can also provide when those need to be completed. We're running a special on our Word Free Guarantee service, which covers that for just $100 a year. Patrick has another question, actually.
Yep.
I'm a single person LLC. What is the best option, S or LLC?
Well, if you're making really anything over $5,000 in profit, sorry, S corp for sure. I mean, if you plan to profit on that business, then an S corp for sure.
Great. Yeah. Any other questions here? Okay.
Yeah. So you probably don't have a lot of expenses. So yeah, I would say S corp for sure.
Awesome. Well, I don't, unless if anyone else has any questions, we'll stick around for a second, but if not, I'd love to give you guys the rest of your day back and wish you all the best of luck on your tax filings this year. Hey, Ricky's got another question.
Okay.
He said, I'm an LLC 1099 based in Dallas, but he works in Virginia. Do I need to pay state tax?
Yeah. So typically wherever the state that you're working in, you're going to have to pay tax in that state. If you're actually working in that state. Yeah. If you're actually,
okay.
Yeah.
Great. And then Heidi asked if we have any recommendations for apps or expenses that don't cost, like Expensify's $5 a month for receipt.
Well, Receipt Bake is actually a really good option. They offer a free option up to a certain point, and so that's a good one to look into.
Little tiny glimmer of what we're working on here.
Yes.
On the product side, for those of you who are wondering, so definitely on our product roadmap, as we've heard from a lot of you folks, tracking expenses is a pain point. So we are hoping to offer free, expense tracking here in the near future in terms of being able to, upload all of your receipts into your dashboard and have them tracked that way. And then, then they'll be able to be categorized and then sent to your financial advisor, financial accountant. So that's very exciting. So look forward to that. Caesar just asked, if I'm making over $10,000 a monthly profit, would you recommend his LLC be taxed as an S corp?
Yep.
Yeah,
100%,
definitely.
100%. Yeah. And then because he's got that pass-through deduction too, so he's got to also consider that. And then he's got his standard deduction of $12,000 if he's single, and $24,000 if he's married. So I would definitely say that. That's also the benefit of having the S corp up to a certain threshold is you have all those extra deductions too. So it's kind of a case-by-case basis, but more often than not, an S corp makes the most sense for most small businesses.
Yeah, I mean, I talk to hundreds of different entrepreneurs every day that are starting their companies, and the more and more I see them asking about S corps because they've heard how much sense it makes. Yep. Exactly. Cool.
It's a one-time thing you have to send off, and then you're good to go from that point on. You just have to you have to file a separate tax return, on an ongoing basis, but there's still drastically less expenses in terms of liability that's saved.
So Tony, any other pro tips for us before? Jurgen asked if you do tax preparation.
We do. We offer it in California. We actually have a lot of clients in California.
Okay, great. Patrick's asked, he was asked about insurance, personal liability, any recommendations?
Personal liability insurance, I mean, you just got to shop around. I mean, well, we have an insurance quote through ZenBusiness, right? You got that through
for business insurance.
For businesses, yeah. So, but not personal on the personal side. Well, personal, is he talking general liability insurance or?
Patrick, would you mind expounding on that a little bit?
Because there's errors and omission insurance. There's a lot of different types of insurance.
Great.
Does.
While he's doing that, I'm looking forward to. Definitely looking forward to seeing how. Oh, here we go. He said yes. He was asking about $1 million in personal liability, and I said I could not.
Well, that's something it's not a question I usually get. So I could get back to you on it if you provide your email address.
So Jurgen, I see your question. I'm going to share the link for you to book a time on Tony's calendar right now.
There you go. Yeah, and then I'll have an answer for you.
Yep. If any of you want to continue the conversation with Tony, he's definitely offering a free CPA consultation to give you some advice on kind of ongoing business taxes. So feel free to please take advantage of that. I'm sending the link in the chat again for you guys to book a link. You can book time here. All right, I just sent that off. Great. Thank you for your email, Jurgen and Patrick. So Caesar asked, how can I go about changing my LLC to be taxed as an S corp? I know Tony, you offer that service, right?
Yep, we do offer that service. So like I said a little bit earlier, I think I mentioned, so it's $200 if it's not late, if it's within the 75-day parameter. If it's beyond that, it's $300. It's a one-time fee, but obviously there's exponential savings over the years. There's 2 different forms that we have to fill out. We have an enrolled agent that prepares those forms. They send it to you, and then you sign it. We certify, mail it, and fax it off to the IRS. So that way we're assured that they get it.
So Tony, for those of us who don't know, what is an enrolled agent?
So an enrolled agent is a licensed person under the IRS. So they're licensed to prepare taxes and represent taxpayers on behalf of the IRS too as well. So.
Great. Yeah, that's awesome. That definitely people should, folks should take advantage of that for sure.
So they're licensed under the IRS to go against the IRS, which is kind of ironic.
That's fantastic. Great. Any other questions, guys? We've only got a couple more minutes here. So we'd love to get any last questions answered that you guys have before we let you go.
Yeah, absolutely. Feel free to shoot. Does anybody use accounting software at this point, or?
Yeah. What are you guys using? Xero, QuickBooks? I see. It looks like about 50% of you are using accounting software currently. So.
That's great. QuickBooks.
Anybody using Xero?
Has anybody ever heard of Xero?
Xero's great. Great. Well, it looks like everyone's about out of questions. Hopefully we answered everything, but I'll Tony, if you want to put your email address in the chat, and then I will follow up this with an email to each and every one of you with the slide deck as promised. You can always reach me. Any questions about your filing or your annual reporting and compliance issues, you can reach us at reach me at JC. There's a letter J and the letter C at ZenBusiness.com. Happy to help you out there. But other than that, I just want to thank you guys again, and best of luck to you guys the rest of your year in your business and saving as much money as possible on your taxes.
Take care, everybody. Take care.
Thanks again, Tony.
Thanks again. Appreciate it. Thanks for having me.
Yeah, of course.